Hey, it's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update. And it's Tuesday because Monday was a holiday for June 1st. It's the 1st of June. First of all, I hope everybody had a wonderful Memorial Day weekend. Thank you so much for everybody who served and who sacrificed for our freedom. So appreciative of all of you. So it was a long weekend. It was a hot weekend. It was a relaxing weekend. Gayle and I did a lot of riding of our bikes, spent some time out on the lake, Whiskeytown, explored some of the old trails in Whiskeytown we haven't been on in a while. So it was really a great weekend to be on or near the water. I think we can all agree with that. And a big shout out to my parents. Today is their 58th wedding anniversary. Jim and Kathy, congratulations on a long and wonderful marriage. Okay, so what's happening in the market? Last week was another week, really no change to interest rates. They ended the week the same way they started. There was a lot of volatility, but it was a short week in the sense that Friday was a half day. We expected the market rates actually to take a big shift on Friday, and it didn't happen. It was just kind of a boring day. It was everybody's waiting for the other shoe to drop, and I think a lot of it was the fact that it was just a short day, and everybody probably bugged out a little early as far as bond traders. So what are we looking at this week? We're looking at jobs, we're looking at economic data, and we're looking at appreciation reports. So jobs, huge week for jobs reports. Every single day this week there's a jobs report. It's really giving us insight on jobs being created, jobs not being created, and wages. Wednesday is ADP private payroll. Thursday is weekly jobless claims. Friday is non-farm payroll, unemployment rate, and just a ton of other reports. And so a lot of data that's going to give us some insight on how well the economy is doing. Generally, if we see the economy doing well and people are hiring and people are actually applying for those jobs, which is another issue. But if we see some insight that everything's getting back to normal, money flows out of that safer bond market into the stock market and other areas, and we start to see mortgage rates go up because we know mortgage rates are traded in the mortgage-backed securities market in the bond market. So when we see that money shift out of the bond market, mortgage rates typically go up, and that's what can happen if we see some good jobs and low unemployment. Second thing we're looking at is economic data. A lot of non-job reports are coming out this week that could move interest rates, manufacturing reports, construction spending. Are builders spending a lot of money on building homes? I think we all know the answer to that. Factory orders. Are businesses and factories and companies actually spending more money to make more stuff? I think we know the answer to that as well. It's happening. Interest rates are so low. Businesses are borrowing money so they can make more stuff because there's such a shortage of product and there's a big demand for it. And then the third thing we're looking at is appreciation. Now, this may not affect rates directly this week, but it definitely has an ability over the long term. CoreLogic came out with a report this week that said they expect year-over-year appreciation for the next 12 months to be 2.8%. Now, CoreLogic is a company that comes out with real estate data reports, and the media picks up on these reports a lot. They do a lot of reporting on the stuff that CoreLogic comes out with. Now, is this 2.8 appreciation over the next 12 months, their estimate, accurate? A lot of people don't think it is. And to be honest with you, CoreLogic has missed the mark for quite some time on their appreciation data. In fact, last year at this time, they estimated that we would see a negative appreciation in home prices in the next 12 months. Well, we know they completely missed the mark on this, and a lot of people held them to the fire at the time they came out with this report that they were wrong, and they were. I mean, in March of this year, we saw over a 13% nationwide appreciation in home values, 13% in 1 month. So to think that in the next 12 months, we're only going to see 2.8, which is not a bad number. It's better than a negative number. It's below an average. If you look at a 30-year average, or about 4 to 6% appreciation. We know that that's not consistent every year. You know, the market ebbs and flows. So a lot of people think they're wrong. They just, again, have missed the mark. And so why do I mention this? Because the media reports this. Our buyers, our sellers are going to hear these reports, and they're going to listen to this and make decisions based on what they think is going to happen. And we all know that buyers and sellers make a lot of choices based on fear. Fear of maybe what's going to happen in the market, fear of missing out on a market, fear of what they can do. And so use this as an opportunity. Use these type of reports as an opportunity to be the interpreter of the information out there. Let them know what really is happening in our local market. We know inventory is very low. It's not going away. We know rates are very, very good. They're not going to skyrocket overnight. We've seen these rates creep up, but my gosh, a 30-year fix still under 3.5% is an incredible interest rate. And it's really up to us to educate our buyers on what really is happening in our local market and what opportunities are there for them so that they don't make decisions based on fear and unknown. So this week, a lot of jobs reports that actually has the ability to have more of a negative impact, rates going up, a negative impact on rates than a positive. A lot of volatility. We've been saying this over the last few months, so we're cautiously floating starting out this week. And then we'll obviously be watching those jobs reports that are coming out. And if we see any sign of the rates going up, we're going to lock everybody. So if your clients need some insight about interest rates, please give me a call. All my information is down below. If you know somebody could benefit from this update, please forward it to them. If you have any comments, I'd love to hear them. Have a great, productive week, and we'll talk to you next week. Bye-bye.